Now it's time for us to discuss our post-Trump analysis. And joining me for this discussion is Matthew Auerbach. He's a fund manager at Capricorn Fund Managers. Lesiba Mthatha, who's sitting right next to me, is a chief economist at Investment Solutions. I've also got Tinashe Chuchu on my left, a lecturer at Wits Business School, and Sisa Nzona, CEO of SA Tourism. Welcome to Open Exchange, gentlemen. Matthew, if I just begin with you now, the reaction on the JSE yesterday to to Donald Trump becoming president was rather tepid, and this is compared to the kind of moves that we saw in Asia, with the Nikkei plunging 6%, and also in the US. Why do you think this was so?
Well, if you have a look, it was actually quite a volatile day intraday. We started off down 2%, and then slowly but surely we clawed our way actually back into the positive. And this was led by commodity stocks getting a bit of a boost from the Trump victory and them deciding to, there will be an infrastructure spend which should boost commodity stocks. I also think, positioning into the election, everyone had taken off risk. So now that we knew what the outcome was, people were willing to put money to work again.
But it looks like they put back on that risk because the recovery on global markets has been so quick. Did you expect such a quick recovery following yesterday's volatility?
I didn't expect such a quick recovery. Yesterday morning I was commenting to my team that I thought markets would be higher in 2 weeks than where they opened, but I didn't expect a recovery like this. Just shows you the cash sitting on the sideline, the option structures that are out there, really pushing the market higher.
And Lesiba, if I can just bring you in now, Matthew did speak about the US's commitment to increase infrastructure spend and defense, and also double its economy. Now, surely a booming US economy should be great for the rest of the world and great for South Africa and Africa in particular.
Indeed, if it does happen that the promised infrastructure spending comes through, now that the Republicans, they own the US Congress, so there is no historic gridlock that we've gotten used to, it should make policy formulation much easier. And if he does implement infrastructure spending, which is really the topical issue globally, if you look at what the OECD is saying, they've modeled that if half a percentage point of GDP is directly put into infrastructure spending in the US, they could generate in that same year around 1 percentage point of growth.
Much needed growth. Much needed growth,
because we are 8 years later into the post-08 crisis with growth that is below potential, and we need to see a faster one. Hopefully this pans out. If it does, it's good for commodity-based economies, and also it could set a tone elsewhere in the world. We've seen Canada already does almost $100 billion of infrastructure spending plans. We've seen $250 billion committed by the Japanese. It could open up as we see this outcome of elections happening elsewhere in Europe next year. There may be some commitments towards infrastructure spending. In other words, the baton of the response 8 years later of this crisis moving away from monetary to fiscal. I think that will help the world in a way. But, fiscal policy takes a long time to unravel. It's not an easy one to just implement immediately. It requires effort, it requires plans that really work.
And we know that he's committed to cutting corporate tax. So you're saying that the US companies shouldn't expect that to happen too soon?
There's a lot that was said on the trail. And unfortunately, it's not very clear and well documented what the plan is from President-elect Donald Trump. Hopefully he will fill in that gap, and he'll make it clear, because cutting taxes has the ability to stimulate economic growth.
Most definitely.
But it also has an ability to weaken other parts of the balance sheet. Debt levels can go up, and already we're seeing that the budgets and the debt levels globally are quite high. So we want to see how he balances those two. But I think the markets are beginning also to see that he's Republican, who are normally market friendly, and all that I think is now beginning to sink into markets.
But then, Sisa, South Africa's tourism sector, now this is one sector that is doing well. It has shown continued growth since January. Are you hopeful that a booming US economy will continue to attract US tourists here in South Africa?
Sure. Just to reflect quickly on this whole Trump story. You know, there's a prayer, and I'm going to get this wrong. It kind of talks about, dear Lord, give me the serenity to know the things I can control.
The serenity prayer.
Yeah, and to know the things I can't control. We can't control what happens over there. However, yes, a booming U.S. economy will, you know, kind of give us opportunity to have more visitors from the U.S. coming through here. Currently, they are a major contributor in terms of international arrivals. I think they're about third after the UK and parts of Europe. It's a growth sector, growth market for us. And right across the board, from leisure tourism, but also the business tourism side, the conventions and stuff, where you get huge numbers coming through. Incentives are something that picking up quite nicely as well. So it's a great opportunity for us.
And Tinashe, I was listening to Trump's victory speech yesterday, and I actually have to read this. So he said that he will pledge to seek common ground with America's partners and not conflict. This surely should be encouraging news for South Africa, or are we in conflict with the US?
I think that's quite encouraging, but you can also make some inferences based on what he has said on the campaign trail. Because, for instance, he expressed his distaste for the NAFTA, the North American Free Trade Agreement. So you could infer that maybe he might not be a big fan of the AGOA, the African Growth Opportunity Act, because on the campaign trail he had said that it seems like America always gets the bad end of trade deals. So he might restructure or try to renegotiate the AGOA.
You know, actually, if I can just pause you there on AGOA, he said that he will undo trade relations with partners whereby those trade relations have impacted on the ability of American people to get jobs. Has AGOA done this?
No, AGOA hasn't done that, but I was making this inference based on the fact that he had also implied that it seems like America is becoming the world's chariot. It gives out too much, because with the AGOA, sub-Saharan African countries don't pay anything for certain products. So I feel that because he had said America is giving out too much, maybe he might want to renegotiate it.
Okay, this is interesting. And if we actually stay on the political side of these elections, now I understand that they were one of the most poorly attended elections. Some 18 million people decided to stay at home. And when I read this, this was quite reflective of what happened in our recent municipal elections, when quite a number of people were also at a juxtaposition as to who to vote for. What can South Africa learn from these elections, and what should we be, or the ruling party, what should the ruling party be learning for our 2019 elections? Perhaps, Michael, if you can come in here.
Yeah, I think if one has a look, one of the reasons I think of the poor attendances is people are loyal to a party. You know, you're going to struggle to find a Democrat quickly moving over to a Republican. But if they're unhappy with what that ruling party or the party they're loyal to is doing, they will just abstain from it. And I think we've seen that with our local elections as well as in the US elections. You know, the guys in the US, I don't think their standards of living have improved over this time. Here, you know, a lot of people are unhappy with the way the ruling party is doing it, but they haven't got over the line or dissatisfied enough to vote for another party. So all they're going to do is actually refrain and abstain from the vote.
And Tinashe, I suppose you're much closer to this as a political analyst. What do you see in the 2019 elections?
Okay, I think in the 2019 elections, we have to address the elephant in the room actually. If there's no free education by 2019, I see the ruling party might change, because this Fees Must Fall movement was more powerful than anyone had anticipated. So I think this free education for all might be a key factor in the 2019 election, yes.
And you know, talking about the protests, we saw that there were protests overnight in the US regarding some disdain about the new president. But Sisa, you know, bringing it back to some of the things that Trump said. So Trump said that he will seek common ground with partners who have been or partners of America, not conflict. And he said that where trade relations have been favorable for America, he will not do anything. Now, many have cited the visa regulations as being something that has been a bit of a disprivileged for foreign nationals, particularly the issue of unabridged birth certificates. Do you see this becoming a problem for South Africa, and should we be acting on it?
Sure. Trump sends a lot of things, so trying to figure out what he actually is going to execute is going to be a bit of a challenge. One of the key indicators that we look at is about freedom of movement between countries. That kind of gives us indicators as to how attractive from a tourism perspective. At the moment is the visa regime is that South Africans require visas to enter into the US. It's not, however, reciprocated, that US guys can come here without visas. However, the thing around unabridged certificates applies right across the world. So therefore, if they're bringing kids along, there's a requirement that they need to prove that they are indeed the parents or official guardians, basically, of the kids. That's a global thing. It's, well, as far as South Africa is concerned. There are conversations, even at cabinet level, to rather look at the unintended consequences of that. Because, again, I mean, as a country, we compete with the rest of the world for share of wallet. Tourists can either go to Thailand, go to Australia, wherever it is, and they'll probably go to the place that's got the least barriers, if I can put it that way. So there is an overview to look at. How do we make sure that we are user-friendly in terms of attracting the tourists that we desire? A key element of that is that as an economy, we have been over-reliant on mining and manufacturing as the big contributors to our GDP. Those are under pressure at the moment. However, they could tick up, with this infrastructure spend that we talk about. We need to diversify our revenue streams in terms of the economy itself. We're sitting at 0% growth, but that's an average. There are some sectors that are doing 6-7%. There's some doing minus 10%. So therefore, tourism has been identified as the ones where we need to pull that lever. How do we make sure that we bring in, we're literally exporting people by bringing them in, which doesn't sound right, but you know what I mean, basically. And that kind of gives us a lot more buying power in terms of our local economy spend. And tourism touches on so many other sectors. It is, in fact, I go around giving people a challenge. Name me a sector and I'll show you how tourism contributes to it. Right from banking, forex coming in, hotels, infrastructure, construction, even to agriculture, because someone's going to eat eggs, breakfast as an example, to retail, right across the board. And we just need to make sure that we pull our pieces together and, and complement the work that we're doing to be attractive as a tourist destination, making sure that the policies and the enabling environment allows us to be attractive.
And Cesar, just very quickly, because you have been recently appointed as the new CEO of SA Tourism, how are you planning to execute that domestically to make sure that the tourism sector domestically continues to grow?
Sure. How much time do I have?
A second.
What we haven't done is we've got to make the case for tourism so that we all understand its impact on the economy itself. I mean, I have this view that we've got to make all 52, 53 million of us tourism ambassadors, because by doing that, we start understanding that we need economic prosperity, right? And if it doesn't exist, this income inequality of us just gets wider and wider and wider, and socio-economic issues start to kind of trickle through. We've got to start from within, however. Domestic tourism is it's not really big in this country. It's actually an anomaly. Most economies around the world have got a very robust domestic tourism, and you layer on an international one. We're the other way around. So therefore, how do we sensitize people around job creation, etc.?
All right, your 1 second is up. Unfortunately, we're going to have to leave it there, and that is where Cesar will be leaving us. It's time for us to take a short break. As I said, we say goodbye to the CEO of SA Tourism. We'll definitely invite him back as the festive season is coming, so we'd definitely be interested in finding out how you intend to make domestic tourism easier for us as South Africans. But we continue our analysis of a Donald Trump presidency for Africa when Open Exchange returns. Don't go anywhere. Now, Chris Carinos, commodities trader at RMB, has just joined us at the desk, and of course we're still here with Matthew, Lesiba and Tinashe. Matthew, if I can just come back to you. Now, just like the uncertainties around BRICS, there are some uncertainties regarding a Trump presidency. How does one position oneself in these uncertainties as from a market's point of view?
I think one needs to look at each uncertainty and address it. If one has a look, what's going to happen when trade is more internally focused and to our current account deficit, and also if one has a look, the US bonds blew out to over 2%, which has an impact on our bonds. So I think one really needs to have a look at as in any format, and just say, what are my scenarios and how should I play it? For us, commodities may continue to bounce, and I think overall often it's worse than it's better than people expect. I think people expect the worst, and we've still got a lot of time to absorb the news and from there make our decisions.
Speaking about commodities, Chris, have you changed your outlook for the oil price?
Well, for the oil price, I think that was the one commodity that didn't really move too much off of what happened yesterday.
But there are murmurs that Trump may make some adjustments to this Iran deal that has just been signed.
I think, look, let's be fair about this. I think the shale industry doesn't contribute as much of the oil to the oil market as one would think. They produce about 8 million barrels a day. The oil market in total is about 92 million barrels per day supplied. So I think how the American economy has usually worked is that if the price suggests it's viable, go for it. I think there is some areas within the US, particularly along the Mexican Gulf coast, where you can't drill, and maybe he could reduce the red tape to that market, and it could be feasible. However, if prices are low and it is going to be a new area where they'll drill, it doesn't make sense. So I think a lot of what happens to oil within the US, taking Trump into account, will be dictated purely by price. On the base metal side and iron ore, Trump spoke about releasing a new wave of fiscal stimulus, building bridges, building walls, building all of these funny things. How the market reacted was quite interesting. So down in the morning off of the potential that he could be placed as president, and then a very, very strong rally, particularly driven by copper. And I think that was off the speculation is because of his previous statements about his fiscal stimulus. Whether that really is the driver is remained to be checked, because copper really started rallying about 2-3 days before. But commodities on the base side and iron ore side, and coal for that matter, is certainly on a tear. If you had to open up a graph of copper and look at it, it's literally a straight line up. It's amazing. So that could be a little bit of influence from the Trump effect, but I think it seems like we've reached a turning point in commodities. Oil is still a bit of a lag, and I think it's mainly because we need to see what happens with OPEC, and I think the market's waiting to see what will happen from that point on. So 30th of November is a big day for oil to see what is actually decided.
Let's talk about this revision in the Fed rate hike for December. So yesterday in the morning when I read the headlines, the market was pricing it at 30%, and this was down from 80% the previous week. But now it's back up to 80%. So what does this all mean, particularly for our own interest rate trajectory that has been aligned according to what the US is expected to do?
Yeah, so markets, again, it's opinion polls on those things, revise very rapidly. It's clear that the US economy is on a firmer footing. It's unlikely that the president-elect will change the constructs of monetary policy immediately. Yes, Yellen's term is due to be renewed or terminated February 2018, and there will be much speculation between now and then whether Trump will change that construct or not. But needless to say, strong jobs numbers, inflation rearing its head, with bond yields having moved sharply, as we have seen in the last few days, above 2% on the 10-year note in the US. It just shows that the normalization of interest rates is on track in the US, which means in SA, and this is now an interesting part, for the last 24 months, we've taken cues from what is happening out of the Fed, because the international component of what drives inflation and domestic policy was more important. But when you look now, Governor Lessege's team, they'll be much more worried about things that are domestic, and that is already around inflation. Yes, the Fed may hike, and I think it's been priced now we're talking about an 80% outcome, but domestically, inflation is improving. And you could see in their model, they usually press it at the extremes of a very hawkish outcome, and it still comes a better situation. Which means that inflation is improving and rates are not going to go higher in SA, even if the Fed were to hike.
Well, I definitely know I can't afford to pay anymore on my vehicle installments, so I hope that interest rates stay that way. But Tinashe, just perhaps some closing comments from you regarding the political developments in the last 48 hours.
Okay, I think the political developments in the last 48 hours, first of all, is that you can't always rely on data, because data is only as good as your respondents, and the polls couldn't have been any way off the mark. And the second thing we picked up from the election was that the world has changed. Twitter is now probably the main channel that politicians could use, even though President-elect Trump was ridiculed for tweeting at 2 in the morning. And I think if politicians don't adapt to change, they might become irrelevant, just like with technology. Banks have evolved, car manufacturers have evolved, so maybe it's now time for politicians to also evolve, because Donald Trump redefined how you run a campaign.
Well,
Yes.
Unfortunately, that's where we have to leave it, and I hope some politicians have heard Tinashe's message there that they should evolve and take to Twitter. But thanks to my panel of experts, that's Matthew Auerbach, Lesiba Mtata, Etienne van Wyk, or Chris rather, and Tinashe Chuchu, the lecturer at